Hello students, I am Dr. Vinod Kumar Advani from the Department of Commerce, the Bhopal School of Social Sciences. Dear student, today we are starting the basic concept of money market in India. Money market is the part of the financial market system or the financial market of India. In this particular part, we have some topics to be covered. First of all, we will look at the concept of money market, then the features, the functions of money market, the participants of money market, and what is the role of RBI, Reserve Bank of India, in Indian money market. Let's start with the concept of money market. What is the meaning of money market? How it works? Before starting the money market concept, we have to understand that Indian financial system or financial market have two different parts, two different categories. First is known as money market, second is known as capital market. These two are major components or divisions of financial system or financial market. What is the difference between these two divisions? First, money market deals with the short-term borrowings. Yes, money market is the market in which short-term securities are traded, are purchased and sold. And what is the capital market? It is the financial market where we have the long-term borrowings. Yes, capital market is for long-term funds and money market is for short-term firm. Now, we are starting the concept of money market. Here, we are going to look at the concept of money market. Money market is the market where we have the instrument of very liquid nature. Yes, it is to be converted into cash immediately. So, it is known as the money market. Money market means market in form of money instruments. For example, we have n number of instruments in this particular market. For example, treasury bill we have, government securities we have, commercial papers we have, just like that. All these instruments are issued by the government, financial instruments and the large corporations. Small companies, medium-sized companies and ordinary companies are not allowed to issue money market instrument. The main difference between the money market and stock market is the money market instruments are traded at very high denominations. Yes, minimum transaction have 100 crore or 200 crore or 500 crore rupees. That's why the public participation in this particular market is very limited. Main participants are government, Reserve Bank of India, commercial banks, non-banking financial companies and other financial institutions with large corporations. This is the money market. Now, we have the features of money market. What are the main features of money market? With the concept of the money market, we can understand some special features of money market. First, it is related with the short-term assets or instruments. Means the period is maximum 365 days, not more than 365. So, short term means money market, it is 365 days. The redemption of these securities, the due date of these securities falls between 1 day, it is minimum, and maximum it is 365 days. Wholesale transaction, yes, the transactions volume is very high, so public participation is not possible. It is highly liquid market. We can purchase, sell these securities at particular any point of time. So, it is very liquid market. Low risk. Yes, this particular market have very low risk because the major players are very safe and secure offerings. For example, government, yes, it is secured. RBI, yes, it is secured. Large scale companies. So, your investment in money market is with low risk and high safety. Low earnings because of the low duration, because of the less duration, the earnings are very less, but the interest rate is normal, or you can say the fair. Now, dear student, we are moving towards the next topic of our presentation, or you can say explanation. This is functions of money market. What is the role of money market? What are the main functions performed by money market? First of all, this is the market used to transfer the large sum of money. Yes, with the help of money market, we have the transfer of money with very large amount. Low denominations transactions are not allowed in money market at all. Now, where we have to transfer the money? Obviously, in money market, the transfer took place from the surplus units to deficit units. What is surplus units? The consumers, the savers who have additional money for their saving, for their investment, they invest their money and gives to the large industries, RBI, government, that is deficit unit. They need the money, that is known as deficit unit. So, in money market, we have the transfer of funds from surplus units means savers and deficit units means industries, RBI, government that need the money. Third function we have, allow government to raise fund. Yes, money market is the major source of inflow of funds, collection of funds for the government. Government use this fund for the development of the country, for the development of the infrastructure of the country, and in return, in consideration, the interest paid by the government. So, money market helpful in raising funds for the state government as well as central government. Next, we have help to implement monetary policy. Yes, RBI have a major role in this particular market, and the financial market, money market instruments helps RBI to implement, to achieve the goal of the monetary policy. Monetary policy means policy of Reserve Bank of India related with the flow of money in the country. Later, in the role of RBI, we will discuss in detail this particular function of money market. Last, we have determine the short-term interest rate. The money market instruments always use to determine, to fix the short-term interest rates in the country. So, here we have the functions of money market in India. Now, dear friends, we are moving towards the next topic. It is who are the participant in this particular market, who can trade in this particular market, who can get the benefit of these particular instruments of money market or functions of money market. First of all, I think now you understand the central bank, and you can say the Reserve Bank of India, our central bank, Indian Central Bank is Reserve Bank of India, is the major participant of money market. Next, we have the institutional investors. It can be domestic institutional investors that can purchase, sell the securities in this particular market. We also have the role of commercial banks, because commercial bank used to purchase money market instrument to maintain their liquidity ratios. Brokers, yes, of course, brokers also involved in the dealing of money market instruments. The individual, yes, individual can also participate, but the role of individual in money market is very limited because high value, high denomination transactions. So, individual participation is allowed, but for limited instruments and for limited amount. Last, companies, yes, large scale companies are also major player of this particular market. So, we have 6 different participants in the money market segment of financial market. Dear students, our next topic is the role of RBI in money market. What is the role of RBI in money market? Actually, RBI is one of the major regulator and participant of money market in India. RBI influence liquidity and interest rates through the number of operating instruments in money market. Actually, money market is dominated by Reserve Bank of India and Reserve Bank of India use the instruments of money market for various purpose in various ways. First of all, the CRR, yes, cash reserve ratio. RBI use money market for the maintenance of the cash reserve ratio. Cash reserve ratio is a particular part of the total deposits of the commercial bank that compulsory to keep with the Reserve Bank of India. Next is open market operation. To regulate the money flow in the economy, the Reserve Bank of India always involved in the purchase and sale of the government securities, means treasury bills. This is known as open market operation. Open market operation means money market operations performed by Reserve Bank of India. Next is repos or repo rate. A particular bank in the condition of the need or requirement can borrow the money from Reserve Bank of India. The Reserve Bank of India charge some interest on that particular borrowings, that is known as repo rate. Repo rate is one of the major instrument or component to regulate the money flow in the country. So, in this way, RBI influence the liquidity and interest rate through the number of instruments of money market. Bank rate, if RBI is offering long-term funds for the banks, for the commercial bank, RBI will charge the interest that is known as bank rate. So, bank rate is for long term and repo rate is for short term. All these functions, all these powers used by the Reserve Bank of India in the money market segment. So, the role of RBI in money market is very important, or you can say very significant. Dear student, in this particular session, we covered the concept of the money market, the features of money market, the participants of the money market, and the role of money market. Money market is very important part of the Indian financial system. Now, you understand better what is money market and how it works. Thank you.